Hey everyone, and welcome back to another Tesla weekly video for today, and a very special one because, well, Tesla is back above $1 trillion in market cap. It's been quite a tremendous week for Tesla stock, but for the overall stock market as well. At the time of making this video, one share of Tesla stock will cost you $323 to have a market cap of just over $1 trillion. In the last 5 days, Tesla is up close to 30%. Year to date, we are now going to be up close to 30% as well. We have been underperforming throughout the year, but now, well, thanks to an election, believe it or not, after all the, Elon being political is going to hurt Tesla, well, as of now, it does not hurt the Tesla stock. Now, of course, what has changed in the last couple of days for the company? Not much, or at least not for now, right? But maybe in 2025, 26, 27, 28, 29, a lot of things can change. And that's what I want to talk in the second part of this video. The first part would be, as usual, the numbers out of China, out of Europe, and even out of the United States when it comes to Tesla sales. So stick around for that. Of course, if you're a member of the channel, you get the Tesla weekly insured numbers at the start of the week. If you want to become a member, you can check out the link down in the description below. Just to help me out, you don't have to do it because you get these numbers anyways each and every Saturday. If you are new here, hit the subscribe button. That's more than enough. We're trying to reach 60,000 subscribers by the end of the year. So I will appreciate all of the support. And if you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So the Tesla weekly insured number came in at 15,700. As you can see, we are still down 8.7% quarter over quarter, but year to date, we are still up 6.7%. Now, we did also see a nice little rebound week over week. Last week, we're at 10,500, now at 15,700. So yeah, this is going to be a quite exciting last 2 months of the year because Q4 is usually a pretty strong quarter for Tesla, and Tesla in China is doing quite well. Now, we also have more numbers for the first quarter. So Tesla sales in China by month and quarter, we are up basically 41% year over year for the first part of the quarter. So basically looking at what we've got now in the green compared to what we had 1 year before, up 41%. BEV penetration is 29.8% and Tesla has 6% share. As for Giga Shanghai deliveries by retail and export, you can see here the split. Export is orange, retail China is green. They exported 27,795 vehicles in October. Now, last week when we compared Tesla Model 3 to the Xiaomi SU7 and the Xpeng model, well, the Model 3 did underperform by quite a lot. We also see the big dip in the last couple of weeks. But now for the last week, we can see that the Model 3 is back above those two. And yes, of course, the Model 3 is not as cheap, I believe, as the Xpeng one. So yeah, quite impressive. Switching to Europe, so the countries that we're having here are UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland. We are up 5.1% week over week. Cumulative numbers for the quarter right now, we're up 19.5% quarter over quarter. And year to date, we're up 11.4%, purely just looking at those countries right here. Now, of course, these countries don't include countries like France, for example. So France, for October, the reported numbers for Tesla sales was 1,741, meaning that year to date, well, compared to last year, we're still down 29%. That also does not include countries like Germany. So Germany for October, Tesla sales number 1,614. And here, even bigger hit, we're down 43% over the same period last year. Now, as for the UK, which was already included in the previous chart, but as you can see right here, we're only down 12%. Now, of course, I say only down because we just seen France and Germany being down way more than that. For October, Tesla sales number was 971. If we look at the United States, the number sits around 53,000 Tesla sales, and we're down 1% over the same period last year. So not that horrible, but you would have thought that maybe Tesla in the United States would be up a little bit. But then again, the overall car market is not really doing that great. So yeah, for Tesla specific, You could say that without China, Tesla would have been down quite significantly this year compared to 2023, and the business would have underperformed by quite a lot. And I would agree. And that's exactly what I said, actually, I think a month or so ago, that China is the main reason why Tesla has been doing much better than expected, right? Europe underperforming, although in some countries doing better this year than last year, but the big ones, Germany, France, UK, are down. Definitely not helping the cause. And in the United States, well, we're down 1%. So, okay, we remain flat-ish. Now, Elon said in the last earnings call that next year, volume should increase between 20 to 30% or so. Of course, that increase, in my opinion, will be because of the launches of new models, more affordable ones, and the Model Y refresh. So yeah, right now there are also a lot of promotions around the Model Y. So my opinion, my guess is that, well, they're trying to push out as many Model Ys as possible, and then they introduce a refresh model probably at the start of 2025. So if you're in the market for a Model Y, I think now would be one of the best times to get it. Also because who knows what might happen with the EV tax credit. Now, in the United States, you get up to $7,500, right? Not everyone, right? Not everyone. But if it were to disappear, first of all, it would probably take a while because I doubt that's high on the list of things that Donald Trump and JD Vance want to do. But since this is something that did pass, I believe the House, now, of course, everything is basically Republican. So if they really wanted to remove it, they probably could. But it's going to hurt the competition way more because the competition is already struggling to sell vehicles in a profitable way. Now, it's also going to hurt Tesla sale, for example, because, well, it's basically $7,500 that a consumer will have to pay unless Tesla lowers prices again and we have a price war. But that will hurt margins. So yeah, it will hurt Tesla, but it will definitely hurt the competition way more because currently they cannot sell enough vehicles to become profitable. So imagine if the EV tax credit gets removed. Now on the flip side, I'll say that I think it will not be removed, or at least not completely, and maybe it might even get tweaked a little bit. How? I think they will make it a America first type of EV credit. So the most American car made in the US will get the EV credit. If your car is mostly made out of parts outside of the United States, then you will not get it. And as you know, Tesla, most American made car on the market. So yeah, we'll see. We'll see what happens. But all in all, I don't think we're going to see the EV tax credit disappear in January or February, right? I don't think it's that much a high priority, let's say. But yeah, if you're in the market to buy a new car, I think now with all the promotions, 0% APR, I mean, why not? Up next, I do want to show you a little segment from Dan Ives talking about Tesla, Elon Musk, and the Trump administration and how that will help Tesla in the long run.
But you're saying a Trump administration would have less regulation and allow Elon Musk and Tesla to push forward autonomous driving and full self-driving.
Oh, yeah, I think if you look what's happened in China, I think that would be a top initiative to fast-track FSD autonomous. There's been a lot of regulatory hurdles, and this is something, Musk talked about robotaxi today. Obviously, the initial sentiment was negative. This is going to be the key, because ultimately, I think Tesla is the most undervalued AI name in the market, and you look what's happened here. This is just more and more going to unlock that opportunity for Tesla.
So a lot of positives, no surprise, right? Dan Ives is a hyper bull when it comes to Tesla and even Palantir and Apple and quite a lot of other tech companies. But he basically says, look, it's pretty bullish because then we know that autonomy will actually be a thing and will actually be maybe a thing sooner than expected. Now, while I might agree with some of it, I think we should not get that far ahead of ourselves just yet. Because, I'll be very clear here, I've been in a Tesla with FSD, it worked. Now, of course, I'm just one example. There are plenty of examples online where you can see where it still does not work perfectly. Okay, so maybe you're going to start in small areas. That's what they want to do next year already. Okay, so we'll start with that. Paid trips maybe as well. So to say that, oh, we're going to see that sooner, it's going to come out sooner, it's going to impact Tesla even sooner in a positive way. I mean, it's already expected for 2025. So how soon do you think this will happen? It's up to Tesla, by the way, to start producing and making the Cybercabs. And I don't think they're ready to make them already in 2025, unless they're really, really sandbagging that thing. But I highly doubt that's the case. So yeah, I agree. From a regulation standpoint, I think I'm pretty sure that a Trump administration with Elon Musk being quite close to it is definitely going to benefit Tesla. It's definitely going to benefit autonomy. I mean, innovation, more manufacturing, more companies being made, more startups, because, well, the unnecessary regulation, the unnecessary red tape will probably or hopefully disappear, which, by the way, will create tons of jobs, right? You create new companies, you hire new people, more jobs get created, right? So that's great, but let's not get ahead of ourselves. We're now a company that's worth over $1 trillion, but financially speaking, right now, and even in the short term, nothing has changed that much, right? Unless 70 plus million Republicans are suddenly ordering Teslas right now, I think we're getting ahead of ourselves. I mean, I made a post on X a couple of days ago, actually yesterday, talking about, well, seeing my portfolio reach all-time highs each and every day. That's great. But my cash pile is increasing and becoming bigger and bigger, because although I like to see everything green and I like to see everything go up, I've seen this play out already before. It's been great, right? 2021, we were all at the start, wow, my portfolio hit all-time highs. But it didn't last that long, right? We then entered a bear market. I don't think we're going to enter a long bear market like we've seen before, but a small little correction I don't think is out of the order, right? I think it might happen. And to be honest, for long-term investors, it makes sense to wait to buy the dip, right? You still have a position, I still have a position. Yes, I'm increasing my cash pile because I am waiting for an opportunity. In the past, my cash pile was not big enough to take more advantage of these opportunities, and you miss out on a better gains, let's say. Okay, let's not get greedy. You need to be fearful when others are greedy, and greedy when others are fearful. So overall, great week for the stock market, great week for Tesla, I think as well, for Elon Musk. Big win for, I believe, the American economy as well. It's just my opinion. Of course, you can disagree. That's fine as well. But overall, yes, I do think that the next 4 years will now be looking much better for especially Tesla, but other companies out there as well. That's all I've got for you right now. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.